All right, what's going on, guys? I hope everyone is having a great trading day. Right now, my portfolio is up $281, and we're going to quickly review some stats. I haven't made a video, excuse me, I haven't made a video in about 2 weeks, but we're going to quickly take a look. For the past 3 months, I'm up 5%, and for the past month, I'm up 4%. $1,127. Let's take a look at the year graph. In the past year, I'm up 12%, $3,094. And my all-time chart shows that I'm up 14%, so $3,662. So we're going to quickly take a look at what the portfolio has gone through. Right now, we're sitting at $28,000. So the portfolio has been spiking up quite nicely here. Let's take a look at some stocks, guys. Apple has been doing very well. It's been doing incredible. This past month, it is up 10%. In the past 3 months, it is up 16%. Let's take a look at my position. Shares 10, average cost 179. So, excuse me, I am up 34% on this stock, guys. This is just incredible. 34%. I have no words for this. Apple's a strong company. Like I said, the fundamentals still remain the same to me, and I feel that this is definitely a long-term investment. I do want to buy some more shares, but obviously I'm not going to buy now. Now that Apple has spiked up so much, I'm not going to buy Apple, but it's one of those blue chip stocks that you hold forever in your portfolio. So Johnson & Johnson 129, we can see that Johnson & Johnson had a massive dip right here. I think this had something to do with more talc powder cases. Like I said, Johnson & Johnson is they're being investigated. They're being sued by all these different branches, but the stock continues to remain around that $128 mark, and I feel that Johnson & Johnson could be a nice play here if you guys are interested in a health stock. I would definitely take a look at Johnson & Johnson. Shares 23. I think I added some more shares of this company. Total return, I'm only up $11, but I'm planning on buying some more Johnson & Johnson. I was seeing if maybe Johnson & Johnson can get down to that $120 mark. I just don't think it's going to happen, guys. But if there's more bad news with this company, it may very well happen. So Disney is doing very well today, 133. You guys know in the previous video that I switched SPG out for Disney, and I do not regret that. My average cost is $129.24 for 10 shares. On total return of $41, I am still very bullish on Disney. I feel that they were a decent buy below that $130 mark, and that's exactly what I did. I had to sacrifice SPG, which is another company that is they're not doing very well. But we're going to quickly take a look at where SPG where it's at right now. I don't think that's right. That graph goes all the way down. Waiting for my phone to load here, and there we are. 153.78, so it looks like SPG went back up. It's definitely a good dividend player, but I like Disney. I switched them out for Disney, and I do not regret that decision. So let's take a look at breaking news. Facebook CEO. Oh, okay. AbbVie, $78.28. Let's take a look at my position. I'm still holding 50 shares, average cost $65, and the total return, this is another one that's looking pretty ridiculous. I'm almost up 20% on this company, $627 returns, and that's including the dividends. Absolutely crazy. AbbVie is this is possibly a good buy under $80, but again, guys, do your due diligence. There's a lot of earnings reports coming up, and these stocks can tank. Shell, $59.70. Average cost $55.55. I'm up $200 with this company. This is a blue chip energy stock, and I thought that $55 was reasonable value. So I bought up some shares, and I like this company a lot. I like Shell. They have a decent roadmap as far as how they're going to, produce energy. And these, I think this is one of the better energy stocks on the market, even though that their dividends are, they're not paid through the U.S. They're paid through I think the U.K. Got to do some more research on that, but they do pay a pretty good dividend yield. I think for my shares, I'm sitting at a 7% dividend yield. So Altria, $46.04. Let's take a look at my position. Average cost $40, 50 shares, so $288. A lot of these stocks are seemingly jumping up into like the 500 return marks. That is absolutely ridiculous. But I actually recently bought Altria at $53, so this total return is it's not what it looks like. I bought Altria at $53. I had sold, and then I bought it again at $40 because I just thought that it would never reach $40, and it actually did reach $40. I think it got down to $59, and because of the vaping cases that's centering around Juul, and since people are getting sick, I've seen reports of deaths. There's maybe like 6 deaths reported within the last 3 months for vaping, and Austria is tanking because of that. But it seems like the stock is starting to recover a little bit. It's up 5% for the week. For the past month, up 13%. So this company is starting to rebound, and they have a very, very solid dividend on that stock. So AT&T, it's 38.28. My average cost is 35. I bought this a little late, but you guys know I've been excuse me, I've been in and out of AT&T a lot. I've been in and out. When it was $30, I've sold at 32. 32 became 34, and then 35. You guys know what I'm just holding at 35 here, but $151 return. I like this company, and I think I'm just gonna see what it does for its earnings report. A lot of these earnings reports was gonna start coming up, and we're gonna start seeing whether or not these companies can, beat the EPS. So 3M 167. My average cost is 160. So I did buy a share of 3M, and like I said, if you bought 3M around that $150 mark, you're looking pretty good right now, because I thought that was oversold territory. I thought that was an overreaction, and I think I recently bought 3M somewhere around 152. So I did added a share of 3M, and I'm up $74 on them. This is a dividend king, and I don't see them going anywhere anytime soon. New residential investment. This is by far the riskiest stock in the portfolio, but it seems like I am doing very well with this company. I have 200 shares for an average cost of $14.24, and my total return is $300. So they recently announced a dividend, and this is a very risky play, but I did a calculated risk. I went on ahead and I threw some money at NRZ, and it looks like it's paying off because it's starting to rebound a lot. So this is a mortgage real estate investment trust, and it's one of the high-paying real estate investment trusts that has, arguably a unstable dividend, but again, that just comes along with the risk of owning the company. So, and the last stock in the portfolio, this is actually ETF, is the PowerShares S&P 500 high dividend, low volatility ETF, sitting at $42.81, 125 shares for an average cost of $38.86, and a portfolio diversity of 19%. So my total return, I'm up closer to $500 with this ETF, and that's not factoring all the dividend payoffs that I have been receiving. 10%. So this is, like I said, guys, one of my favorite ETFs. It has a eye-opening expense ratio of 0.30%, but I think that the expense ratio and the fees are well covered by the monthly dividend that it pays out. And this ETF is filled with real estate and utilities. So if you're lacking stocks within those particular sectors, this probably be a good ETF for you to pick up. And I think that's going to do it, guys. My phone is a little bit laggy here, but I apologize for that. And the price movement for Disney looks like Disney is starting to rebound a lot. There might have been some news that came out. I looked at my phone earlier. I saw some news with Disney. Something happened, and I think that's what's causing the stock to go up. But all my stocks are in the green. I have 10 companies, and I don't think I'm looking at any other companies right now. I think PPL, I was looking at them the other day, but they have rebounded a little bit, so they're not at $29 anymore. I'm not going to buy them, but the portfolio is looking good here. And let's take a look at our dividends and see how much dividends we're going to actually be getting. I have actually been taking money out of portfolio and putting it back into my savings account. That's not something that I actually want to do a lot, but I figured that I want to try to focus on my M1 Finance portfolio, my Roth IRA. So, I'm taking money out. I don't want to go crazy with this. I don't want to take too much money out. But NRZ is yet to pay $100. That's absolutely incredible. So number of shares 200 and the total amount is $100. So that was a calculated risk, and it looks like it's paying off. SPHD is $19. They pay every month. You guys know that for each and every month I will be getting over $100, and just right there, NRZ just paid over $100. Combined with SPHD, which is $19, so that's $119. Combined with Altria, which paid $21, so yeah, it's well over $100. For November, we can see that Avi is going to pay a fat dividend of $53, and AT&T is going to pay $28. You guys know that SPHD pays every month, so that's taxed on another $19, and Apple, I believe, pays on that month, so that is over. I believe that will be over $100, and like I said, the portfolio is generating $100 each and every single month. So very good, guys. I like what's going on with the portfolio. It has rebounded, but I will continue to watch this portfolio thoroughly. I do want to add some more companies, maybe about 5 more companies, and yeah, that's the plan. That's the outlook that we're going to be rolling with. But thanks for watching, guys. I hope, like I said, I hope everybody's having a great trading day. The markets seem to be going up, and just look out for these earnings reports that are going to be reported very soon. Take care, guys, and I'll talk to you guys next time.